Hello, in this presentation we will be taking a look at the home page of QuickBooks Pro 2018, specifically looking into the customer section. If you've been continuing along with us, we will be continuing with the Get Great Guitars problem. If you want to restore the backup file and have access to the backup file, you can go to the File and Restore the Backup. We have done so in a prior presentation to walk through that process. We have the current open Windows open over here, and in order to open the Open Windows item, go to the View tab and select the Open Windows list. The only current window we have open is the Home tab. If the company opens up, it typically opens to the Home tab, but if it does not, you can go to the Company drop-down up top and the Home tab. The Home tab will be that useful page. We looked last time at the Vendor section of the Home tab. The Home tab will give that pictorial view, help us drive through the implementation of most of the data, like 90% of the data will be input using some icon from the Home tab. QuickBooks will then use that to create a form. Those forms then will be used to generate everything we need in terms of the reports, the balance sheet, and the income statement. So this is really a great place to go. We're gonna take a look at it here, go through the flows, and then as we create the setup process and as we go through the reports, we will continually go back to these icons. These are the driving factors that will be used. They're kind of like the keys on the calculator that QuickBooks uses from the input perspective in order to do the calculations, in the case of QuickBooks, those being the financial statements. Three sections. We have the vendor section, the customer section, and the employee section. We went over the vendor section last time. That's like the accounts payable section, the payables or purchases cycle. We're going to go through the customers section here. That's going to be the sales cycle, customers who we sell to, the vendors who we purchase from. So this is going to be our main sales cycle. When we go through the sales cycle, we typically think of it as starting with an invoice. So we're going to have the invoice. And that's going to be the typical item where if you are in a kind of business where we do work and then we bill the client, and then we're going to get the payment in the future in the mail, such as a bookkeeping service where we actually have to do the work, and then we got to count how many hours we spent, generate a bill, and then mail the bill out, and then we're going to have to get paid at a later point in time. This invoice then is what we're going to use in order to bill the client. Has a few functions. If we click on the invoice, we can go back to one of the invoices that have been generated by going to the previous icon. And we can see the data that we're going to use to input the invoice. It's got the customer, and we're going to have the type of template. We're going to have the date, invoice number generated automatically by the invoice, bill to, purchase order, the terms, when we expect to get paid, and then the item. In this case, it's an inventory item. We sold inventory, a guitar here. And then we're going to have the sales tax information at the bottom. So when we put this information into the invoice, what the invoice does is it says, because it's an invoice, it's going to assume that we have not yet received payments. We're just mailing the bill, in essence, to our customer. And therefore, it's going to increase the accounts receivable, what is owed to us from the customer, by just generating this invoice. It will also increase the sales that are going to be on our income statement by, in this case, the 500. And it will even calculate the sales tax for us and track the fact that we owe sales tax, that being to the vendor of whoever state we owe the sales tax or the value added tax on any sales that we make. It will also, if we are selling inventory, track the decrease in inventory for the, in this case, guitar that we sold, and the increase in the cost of goods sold. If we don't sell inventory, then of course we don't have to worry about that. We won't have any inventory to worry about. So by inputting this data just into the screen, pretty simple input screen, QuickBooks will do all that. It'll generate what we need on the balance sheet. It'll track who owes us money in terms of accounts receivable so that we can go back and ask for that. It'll track who we owe money to in terms of sales tax, and so that we can pay the sales tax or value added tax that we need to pay. Now, of course, there is some issues when setting this stuff up. We're going to have to set up the items that we're going to use here in order to create the invoice. That takes a bit of time. We're going to go back and forth through the invoice when setting up items. Once set up, however, it's pretty easy to just do the data input. We're also going to look at the financial statements and then go back from the financial statements to the invoice at a later time. But this invoice is the first step in our process. We're going to close this back out. So typically we think of making an invoice, and then we're going to receive the payment after we've made the invoice. We're going to get something in the mail, typically a check, hopefully, in the mail, after we've billed the client for our bookkeeping service, if that's our example. When we select the receive payment icon, we're just going to say we have a check in our hand that we got from the mail. If we go back one, we can take a look at an example of one. And this one came from Music Store Stuff. This is a customer, gave us a check for $816. There's the date, check number of the check we received. And then we can just check that off to a particular invoice owed, tying out the invoice to the check. So this would be step 2. We would get the check, and all we'd have to do is go in here and say, there's the customer we got it from. And it would just say, well, here's the 2 invoices that are owed from this customer in this case. This is the invoice we are applying it to, and it will then tie that out, and it'll do all the calculations for us once again, meaning it's going to decrease the amount that that customer, Music Store Stuff, owes us from this particular invoice that has now been paid by this check. It will also increase the cash type account, in this case an unearned revenue. We'll talk a bit more about that, but it'll increase the fact that we got money, we got a check account. And it will do, all that for us just by this simple clicking, basically, just this check box here. So we'll be able to take a look at the financials later on. We'll look at the financials and we'll see exactly what is happening when that happens. We'll close this back out. And then if we go straight through this flow process, we got create invoice, we got receive payments, and then we're going to make a deposit. Now the deposit's not exactly in the customer section, banking section, but it's pretty close, and it's part of the same process. Usually when we make a deposit, hopefully, most of those deposits are from the fact that we sold something to a customer. And so it's part of the customer cycle here. And so if we click on the deposit, it'll pop up a screen here that will just tie out the deposits that theoretically we have on hand from the last icon we checked on. And in essence, if we were to click on that, we would just click on them in accordance with the actual deposits that we're going to the bank with to deposit. And then it'll group the deposits in accordance with the amounts that we are going to deposit into the bank. And it'll just tie those out. So we're not going to actually do that here, but when we make the deposit, once again, QuickBooks will do everything for us, meaning it'll deposit those items into our checking account in accordance with the grouping that we're going to deposit them in when we go to the bank, and it'll reduce the undeposited funds, which we'll talk about more of that process. But in essence, it'll record the deposit for us. So I'm going to close this out and close this out. That's going to be the main process. So when you think about the customer cycle, typically you think about we're selling something on account, increasing people owing us money, accounts receivable, and sales. Then we're going to get the money from the customers. And QuickBooks will record that, but not put it into the checking account until we actually record the deposit. We'll go through this process. We'll take a look at how to set up inventory items and sales tax items later, and we'll always be jumping back to some of these items when we do so. We also have the estimates here. Now this is going to be important for some types of companies, possibly construction companies that would need to set up an estimate before creating the invoice. That option will be there as well. You might be thinking, well, I have a company that does not create an invoice and bill them. I bill the client right then and there. So maybe we have a type of business where we do not want to send the bill out and run it through accounts receivable, but in essence, just make a sales receipt. So in our case, if we're selling the guitars, if we're in the store and we just make a sale of the guitars, then we don't really need to make an invoice and take it in and out of accounts receivable. We are just going to receive the payment at that point in time. And by doing so, we're basically bypassing this and going directly here where we want to say, I'm getting a check or money or cash, and I'm recording the sale at that point in time. That would be this icon. And if we check on that, it looks much the same as the invoice, except it's a sales receipt. If we go back one, we can see an example. Music store stuff here is the customer, the template. It's going to be a check was received, date, sales number will generate automatically, check amount, and then the item. In this case, once again, we sold an inventory item. So it's a guitar we sold. So actually it was rent music equipment. We rented out music equipment. It was not an inventory item. We rented music equipment. And therefore we had the rent price. And this form will do everything for us in order to record this, just like the invoice. In this case, however, the sales receipt, not meaning that people owe us money, but meaning that we have received, in this case, a check. And therefore it's going to go into an increase in a we-received check account called the undeposited funds until we deposit it. More on that later. The other side will be the revenue. In this case, the revenue for rental revenue for the music equipment. So we're going to close that out. That then, of course, will bypass and go directly to this point in our progression. And then we would go to the deposit and just deposit that at the end of the day. This will be the main process that we will be focusing in on, the main process of the customer's cycle, that being the create invoices, receive payments, record deposits, or create sales receipt, and then record deposits. We do have some other icons, which will be the accept credit cards, dealing with the setting up of the acceptance of credit cards. The refunds and credits, dealing with when we have someone that's going to return something and we have to give a refund and or credit. And then some adjustments in terms of the statement changes. We can make some adjustments and use this icon to adjust some statements and then take a look at those statements through this icon. But we're going to be focusing mainly here on this core process within the customer's cycle. As we do so, we will set up some items, which we will go back and forth to this icon here in particular and this icon here to see what those items will be, in particular the inventory items and the sales tax items. And then of course we'll go to the financial statements when we look at the balance sheet and the income statement and continually go back to these documents, these being the driving documents used to create those financial statements. The functions of these documents in order to generate these documents being some of the things that we will create in the lists and items. So when we look at the items, those will be the inventory items. And of course, we will also have to set up the accounts, which will be used when we record these documents as well.